Yo, yo, yo! What's going on, everybody? And welcome to episode 9 of Owl Eyez on BASE Defi. Man, I spelled I did the title wrong again. Owl Eyez on BASE, but hey, the title may be wrong, but the content is also right. Today, as always, I am with the man, the myth, the DeFi savant, Mr. Crypto Noah. How are you, my friend?
Hey, what's up? We kind of cut out for a minute, but I'm assuming you asked me how I'm doing because you're a nice guy. I'm doing well today. Got another cool show. Hopefully you guys got value from the little fundamental analysis that we did last week. So we're going to run that back here again. And per usual, guys, if you have any requests on what you guys want us to cover for future shows, please do let us know here in the comments. You know, we want to talk about things that bring value to you guys that you guys want to hear about. We do this for you guys. So yeah, we're going to talk about Syndicate, and we're going to look at some pool. For the best part of the show, on some cool merch. This is my first time wearing this. This is a Super Chain shirt, rocking the long sleeve. I think they got the ski because it just slides down really fast. I got the Super Chain hat, and then on the back of the shirt it says Super Chain. Very comfy, very soft, classic ETH Denver merch. Also, I think I have the shirt in blue as well. Basejunkie. How you doing, my good brother? What you rocking? How's everything, man?
I'm doing well, apart from a slightly spotty internet connection. I'm not sure if it's you that's slightly lagging or if it's me, but there is a little bit of disturbance in the force. But I must say, you are always dripped out in that fine crypto swag. Today, I am wearing something I know I haven't worn because living in Portugal, it is always a sunny day. But today, finally, hallelujah, there was a cloud. So I'm like, you know what? I've got this long tee. So today I'm representing Cody. These guys are they are mini app developers. There's some more Cody branding over here. I think they won the Buildathon at On-Chain Summit. Actually, I had a great chat with the Chads over in Vermont. They built a mini app, an emoji guessing mini app, and you pay $1 to guess what the secret phrase is, the secret combination of emojis, and if you guess it right, you win all the money that people were guessing. Yo, Ajakara, super bass from Fireside to the World. That's what's up. Shout out to you.
What's good?
Owl Eyez.
I love that POP or that what do you call it again?
PFP.
POP holding it down.
Yeah. Tell me you don't NFT without telling me you don't NFT.
Exactly. No, mine is an actual NFT too, is ours, but I forgot. I always got it mixed up with POP because of that meme.
Well, dude, I'm looking forward to today's conversation, talking about Syndicate, because I'll be honest, I kind of, do you ever have it, and maybe you don't because I know you do your due diligence, but do you ever have it where you just ape on the recommendation of a friend? You just ape into a token. You're like, yes, this makes sense.
So I used to do that, but I've lost enough money to learn my lesson. I had to learn that one the hard way. So basically, there's a really good video that we actually popped into the group. If you guys join our free community, by the way, Basejunkie, if you go inside and you click recommended crypto and finance videos, there's a video on position sizing by this guy named Jesse Livermore, who's like a legendary stock trader. And one of the most important things when you're, buying something and that you deem good, right? Warren Buffett says that he would rather buy a bad asset at a good price than a good asset at a bad price. And it's just that when something just launches, it's hard to know what price discovery is. So this is when risk management comes into play. It's just like, oh, we want to buy as much as we can because, we had the news that, on the 16th, they were launching their mini app factory, but nothing happened in terms of price. So it's good to ladder in, right? So what I'll do is I'll be like, okay, I want to put in, let's say $10,000 for easy math's sake. I want to put in $10,000 into this asset, but it's not a lot of price discovery. And I do realize that buy the rumor, sell the news happens often. So it's while it is a high probability that it can go up, also had in my mind that it was also a high probability that it can go down because people were going to sell the news because it's like, oh, just because the mini app factory launches, it's not like it's going to be hella apps being built in one day. Like it's going to take some time. So if I have $10,000 that I know I want to put into it, I'm probably going to put in 3 to 4K in that first tranche, and then kind of like ladder in $1,000 at a time, $2,000 at a time, depending on how the chart looks, depending on how the growth metrics are, and a couple of other factors. So I didn't ape in my whole bag. So now it's good because the price has dropped significantly, and now I'm laddering in. It's lowering my average buy-in price. So even if it gets back to break even to when I first bought in with my largest allocation, I'm going to be in profit. And I'm also taking my yield farming rewards and I'm using that to buy in as well. And then what you don't want to do is like, okay, if you got $10,000, let's say you yeet the whole thing in and it goes up 100%, 200%, whatever. At that point, you want to be taking profits out, not adding to it with your principal. If you're adding to it with the yield farming rewards with profits, that's investing. If you're adding to it with your principal, that's gambling. So yeah, I've learned my lesson many times on that, but I've got burned enough to where I'm just like, hey, I've heard the world promised on so many projects and I just saw it drop. So now I'm just gonna boom, 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 stick to my rules.
I think that's smart, and that's something that so many of us have to learn the hard way. And yes, I mean, my wife, she says to me like, you've heard this before, like, because I the other day I was telling somebody, a friend of mine, I'm like, I'm 100% sure Base chain is going to be, the future. Coinbase, it's too big to fail. At the forefront of government legislation, it just makes complete sense to me. And she was like trying to catch me, like, hey, don't say 100% a sure thing, because you've been positive before, and then things just just haven't panned out as planned. And yeah, I think having rules, so you're not just emotionally trading, I think that really is a fundamental skill that so many of us have to learn the hard way, unfortunately.
Yeah, it's like we want to use intuition, but trading and investing is that one thing where you want to go against it. Right? Ray Dalio is the manager of the largest hedge fund in the world in Bridgewater Associates. He's the chief investment officer. They manage funds for central banks and sovereign wealth funds and all that, over $100 billion in AUM. Says in order to be a good investor, you have to be willing to bet against the consensus and still be right. So it's like our brain is set up to protect us from pain. We have fear and greed. So when things are going up, we want to buy more when we should be selling, and opposite on the way down. So it's good to have your rules in place. And you do want to rely on intuition to a certain extent. Like after you observe a bunch of data, you look at growth metrics, you're like, how do I feel like this thing can grow based on other things that I've experienced? And that comes into play when investing in what you understand, because now you have data that you can use your intuition. It's like bias is good in certain regards. I'll just leave it at that. This is your chart. These are your buy-ins here.
No. So this was I think this was the level we were looking at last week, where it was, and I think that's where I put my lower limits. So
Gotcha.
So last week I was providing LP for OpenX and WETH. This was my lower limit. I was feeling we would go up, so I left. I don't think I even. Well, I did have a higher limit, but it was like maybe above this candle. It was definitely room to grow. But we came under it, so I've been out of range for a while. But I believe in the project, in the team. So I've pulled my LP position there. I'm sitting on OpenX AI tokens, but I just wanted to get your thoughts on perhaps like technical analysis. I just noticed we've come down to this range, which was like the previous,
Where they launched pretty much.
yeah. So they launched on the 11th, and then they came down. I guess it's like a local bottom. What are your thoughts? What's your interpretation of this chart?
My interpretation of the chart is the market is basically waiting to see if this project's going to be good or not. Like all of the fluff has been sold out. So for me, I'm buying at this level because I believe in the project. The team is strong. I mean, you saw the video. If you guys haven't saw the fundamental analysis video that I made on OpenX AI, it is on my Crypto Noah YouTube channel. Yeah, I'm constantly buying with my liquidity provider rewards. Even if it goes lower, I'm still going to be buying. Like this is I really do believe in this project. So it's not going to stay down forever. And once we get word that the base app is going to be launching, base app tokens are going to pump. We know it, right? So yeah, the chart looks bad. And another thing is just like, what are we on here? This is the 4-hour chart. So the younger a chart is, the less reliable the technical analysis is. Okay. So yeah, I mean, I'm down as well, but I'm still buying. I like this chart because, hey, when it goes back up, people are going to be buying our bags.
Yeah, that's kind of my feeling. I mean, like with the
If I were you, this is another thing I meant to say. I would, and you're still bearish on it. Obviously, we talked about proper wallet separation. So the OpenXAI that you want to just hold and wait for the price to go up, I will have that in like another wallet, and then the capital that you have for providing liquidity. If the volume to TVO ratio is still good, let me check the old Yield Hunter tool. If the volume to TVO ratio is still good, I will still be in it because that allows you to, like you said, that you yeeted in, you were degenerate, and you put all the money that you were going to invest into it, right? So now you have the opportunity to lower your buy-in price. Yield farming, providing liquidity in DeFi allows you to lower your buy-in price without having to take your principal capital to actually buy it. And what I mean by that is, this is our proprietary Yield Hunter tool. You can see it's a 1% fee tier, which is great. On Uniswap, it's paying 398%. That's over 1% per day. So now you're getting fees, like you're getting a 1% fee in OpenX AI and ETH, while OpenX is at all-time lows. So that 1% fee, like let's say it gets you 1,000 tokens because the price is so cheap. Then when the price of the token goes up a couple 100% or whatever, you're going to have more tokens. And if you're still providing liquidity when the price is higher, you might get 500% because that's what the 1% represents. So it's really, really, it's really, really important to where if you're bullish on a project, you really want to be providing liquidity for it when the prices are down, because it's allowing you to dollar cost average into that project, assuming you're keeping some of the rewards, so that when it goes back up, your average buy-in price is cheaper, so that when you get back to your break-even price, you'll actually be in profit because you got to accumulate some while it was cheap.
For my situation where I came out of range, so I started with like $1,000, right? So I put $1,000 into OpenXAI. I think it was, I forget what the split was, maybe 800, 200 with ETH. Now it's total value is like $500. So bullish on the project. I wish I was still in range, to be honest. That would be cool. But I had my limit set quite just below the previous local low. Would you recommend getting back into an LP position? So what would your recommendation be to me? As wait it out, wait till the price goes back up and then get back into it, or accept some of the impermanent loss and create a new LP at this lower price?
The latter. And here's the reason why. So this is the USD chart. Obviously, we're big down. If we go to ETH, it pretty much looks the same. So you said you were around here or something. What I would do, I think this thing could even go, it can go even lower. And I would put it lower because it's just like, if it does go lower again, that allows me to buy at these prices. Okay. And so I would probably be somewhere around here. Let me measure this out. That would get, that's 400% wide. I don't need to go that wide. This might be a good tranching strategy to where you do something like this. You clone her, and we're going to change the color to, yellow, clone it again. So now what this is going to do is, let's say I do something like this, right? So I would actually get even tighter, do something like this, because man, I think this can break out pretty soon. Like I'm going to be checking to see when apps are built. So this allows me to be like, okay, it could consolidate for a while. Like imagine had you been in this tight range here, you did really good. It's probably, I think it can consolidate here for a while. like few more weeks, honestly. But if it doesn't and it breaks out, you still get to capture the yield inside of your yellow range. And again, I don't care about impermanent loss when I'm providing liquidity. Those are for people who are using their whole portfolio to provide liquidity. I run my portfolio like a market maker in that I have my cash position where I'm looking to deploy for cheap. I have my asset position where I'm looking to sell for capital gains. But for my liquidity pools, all I care about is cash flow. That's all I care about, man, because let's say the thing consolidates for another couple months and it's still paying you out 1% a day. Well, you'll have more to sell when it finally does pump if you're taking your rewards and you're having them go up. All I care about is cash flow. So eventually, if you do this long term and you're yield farming long term, eventually you'll get to the point where you're in these pools and you get 100% back in rewards. So now it's like you're in a risk-free pool. So even if ETH and OpenX go to zero, you still made profit. Well, you know, if you're saving it in ETH and OpenXAI, then your holdings go to zero too. But you get the point, right? All I care about is staying in range for this portion of my portfolio. And for my capital gains portion, I'm holding it. And I'm just waiting for my sell targets to hit. So to answer your question, if it's paying out good and I'm still bullish, I want to buy right now while the prices are really low and be DCAing, especially in a pool that's paying me over 1% a day, right? If I'm in this tight range, it's probably going to be paying out almost 2% a day. And this one's probably going to be paying out 0.7 to 1% a day. So yeah, I would definitely be in here for sure, because once it goes up, all the other liquidity providers are going to hop in and it's not going to be as competitive unless the buy-in volume just wildly exceeds that. But yeah, I would still hop in, man. I would still hop in for sure. Go ahead.
Can we look one more time at the yield hunter tool? Just okay. I just want to look at the numbers. So here it's got what, almost 400%. Fantastic. Correlation 80%. Liquidity 55k. Volume 60k. Fees 600. The volume to TVL. Remind me, is that better if it's higher or lower?
Higher the better. So let me actually go to Uniswap, because this might be a little skewed because it's a new pair. And I always double check Uniswap as well. So if we go to Uniswap and we go to pool and we go to search and we go OpenX and we open that up and we scroll down, where is it? Pools. And what I've noticed is that the DEX will show an APR that's lower and revert will show higher. So it's normally somewhere in the middle. So this is 1 day volume. So 1 week, we see the volume is low.
It's funny that
it won't even show me the liquidity for this one. But
it's funny that 48% APR is like, oh man, that's so low. But
well,
compared to
that's an average though, because you don't know where people have their liquidity. So if you're in a tight range, you're going to get higher than the average. Everyone's not getting that because everyone has different ranges because it's concentrated liquidity. So right here is saying that the 24-hour volume was 164K. The TVL is 374, and the volume's way down. So if your liquidity is concentrated really, really tight, then you'll get higher than this average. So this can only tell you so much. Same with the Yield Hunter tool. It gives you the average as to what everyone's getting as an aggregate. But if it's just one person in there that's in a super tight pool, and that's why I would recommend doing a tranche strategy and a wide one, because the wide one is going to help you capture big candles like this. Like one day there's going to be a God candle. It's just like it was with Zora. This is the same thing that happened with Zora, bro. Same exact thing. And then once that God candle appears, it's going to create momentum. Other people are going to start buying it. And you're already going to be in range and you're going to be able to capture that yield. But right now, things seem doom and gloom, and all these concentrated liquidity providers and investors are thinking short term. They think when it's like this, it's going to be like this forever. Just like when things start going up, they think they're going to be going up forever. So we got to be like thinking ahead. And that's what I would do here. That's what I did with Zora, and you see how that panned out.
Yeah, man. It's kind of funny that literally it was just it was like maybe a week or two after I left that pool But I was just like, nah, you know what, Zora, I get it. Jesse's a fan, but it's not for me.
Yeah, look
And
at
then,
it was this week. It was, look at that. Those candles were really, really low, really, really low. And out of nowhere, boom. And now the momentum is still high. Even though the market was dropping down, we got big green candles and big red candles. But I don't care because you make money off of both of them. Same with Zora Wrapped ETH. Got these big candles after it was just lackadaisical for weeks to months. And then out of nowhere, yeet. So you never know when the best days are going to come. You never know when the biggest fish are going to come swimming. But you just got to have your net in the water so that when they do, you'll catch them.
I think your analogy of, well, I mean, not really an analogy, but the chart you showed, if you miss the 10 best performing days, that's the one.
If you miss the 10 best days, your performance is cut in half. If you miss the 40 best days, you actually start to lose money. So going back to your concentrated liquidity position, by you being out of range because you're like, oh man, this thing is down. I don't know how long it's going to go back down. And then it goes back up and then you go provide liquidity. And let's say it goes down again, you actually start to lose money. So it's actually most important to provide liquidity on the worst days because when it goes up, it makes the world of difference.
Yeah, man. I think I need to stop being a little pussy.
That goes back to emotion things. Like you have to go against your emotions. Like it feels like, oh, let me just stay on the sidelines and get confirmation until the market goes back up. But you already have confirmation in your research that you're bullish on it. So that's all the confirmation that you need. So you want to accumulate it while it's cheap as long as you can, because we may not ever see OpenXAI go back down to the price where it launched at. That might not happen.
Yeah, that's super valid. Important question about the community. How is the fashion game?
The fashion game?
Their crypto swag.
Oh man, people who go to ETH Denver, they got all the swag, man. I haven't even watched it. Like, bro, this is my first time wearing this shirt. I forgot I had it. I was looking for another shirt that I had that I'm gonna wear on another show, and I won't tell you guys about. And then I was like, oh man, I forgot I had this Super Chain shirt. Like, I got all my long sleeve shirts on one hanger because I'm just like, I just put them all here. And I was looking at them, I was like, oh man, I forgot I had all of these. So, yeah.
And nice. Well, that's a crypto teaching problem. But hey, listen, we've been talking a lot about OpenXAI, both bullish long term, and just I appreciate your insights. So I'm going to re-enter that pool. But there are other pools that we want to talk about, and also I know you did a lot of research on Syndicate. Last week we didn't get a chance to dive into that, but lay it on us. Give me that hopium, because I I have been DCAing down into Syndicate. I bought in on the launch. I think I bought on like the first dip. It was around like 2 something, and I bought in my first buy was like 140, and I was like, okay, yes, I found the local low. And just like the meme, when you buy the dip and it keeps dipping, it's like, like, but
that double dipping gets nasty, just like it does in real life when you're dipping in the chips. It's like, I'm double dipping.
Man, I got like right down in it. I was like quintuple dipping. My lowest buy was like in the 20 something cents, and that's kind of where it is now. But I feel like I'm just like I'm throwing rocks at a dead crocodile or something. Just like, just come on,
Like, come on, do something.
Yeah, exactly. So, but anyway, like I put most of my money higher up. My average buy is still over $1. So I am I am down. I'm down on Syndicate, but I'm a community holder. These are not paper hands. Like let's turn it around. Tell us what were your findings on Syndicate?
So before I get into that, do you know if any projects building on there yet? Like, have you heard about any building happening?
Clankamon is
Yeah.
they might be the biggest app on Farcaster. They're a gaming app. I heard them on 11 a.m. with Seed Club. They were talking about how Syndicate, the whole chain, has like opened up new possibilities for them. So
Okay.
that was like the first use case that I've actually heard of.
Okay. All right, so this is the Syndicate token. Oof. I mean, if this was a slide, it'd be fun, but that is uh, that
If
is
the, if these are your hopes and dreams, oh man, 20 cents now? Like, oh, is this like I thought I bought like 4 cents and we're up to like 25 cents. I'm like, there's hope. And then you showed me this, dude.
Yeah. So going back to like laddering in, like I was talking about with OpenX, I haven't bought any Syndicate yet, just because like when we were talking about it, no one was building on it yet, so it was strictly hype. And hey, don't get me wrong, in crypto, this is a place where hype can take you far to the billions in market cap. But I feel like the market has gotten a lot smarter. It's 2025, you know, it's not 2017. Even though BS still pumps, and this is not a BS project, by the way. I'm not saying that, but BS pumps, right? So with market cap to FDV disparity as large as this, and with no building happening yet, I was like, I'm just going to wait. And I'm glad I did, because now I'm comfortable buying at this level. I haven't bought a single cent of Syndicate, but I am bullish on the project. So really cool website. They got a couple cool companies on here. They have Nike on here. Let me hide this. And basically, what is Syndicate to start off before we kind of start talking about stuff? So it's an infrastructure protocol. It's a platform. And we like platforms. You know, if this is your first time watching the show, platforms in any kind of industry is always a good investment, or the best investments, I would say, because they allow things to be built on top of them. And those things that are built on top of them makes the platform that much more valuable. Hence, you know, Facebook's the top marketing platform. Google is the top search engine platform. Ethereum is the top platform for smart contracts, which Base is built on, and Arbitrum and Optimism and Polygon and ZK Sync and all these different, you know, projects. You have the App Store with Apple. You have the Google Play Store with Google. It makes it more valuable because they get a piece of all that revenue and camaraderie. All right. So basically, Syndicate's a infrastructure protocol that enables app chains, which are application-specific blockchains, where devs can build a chain with their own, basically, rules. Some of those rules: transaction sequencing, logic, governance, MEV policies, fee models. It basically gives you more freedom on what you want to do with your chain. And there's a cool concept out there called blockchains as cities, right? And just like we have different internet browsers, where it's not just going to be one chain, right? And just if you look at cities, right, you have the most important difference to cities other than the laws is their building codes. Like I live here in San Francisco, and in San Francisco, while you do have to have keep your home in Victorian style, you can paint it whatever color you want. Like you can do whatever you want with your house. But in places like Arizona, all the houses have to look similar. In places like New York, you can build really, really high all over the city. San Francisco is not that many high rises unless you go downtown. New York, everywhere is a high rise. So depending on what you want to do, what you want to build, that will determine what chain you use. And right now, it's kind of like just a lot of dirt and a lot of people just building, but we don't really know what's going to be housed inside of those buildings yet. The most clear idea that we have is Ethereum, and that's why most of the building has happened on Ethereum, and also Solana, right? People like launching meme coins on Solana. It's built for speed, etc. So you have the Syndicate token, which is the native token of the network. It's used for gas, and they have staking, right? And then so it's just like, why are we even talking about this project? Like, why are we talking about Syndicate of all Base projects? Well, Base is Coinbase's blockchain. We're really bullish on Base. Coinbase is the white knight of crypto, and this is a platform within a platform. So I think if Base continues to do well, if the Base app does well, and then projects start to build on Syndicate, those projects with tokens on Syndicate are going to pump. So I like to keep my eyes out for platforms that people start to build on top of. And that's why that was the first question that I asked Basejunkie before we even started this. So
it's actually Clankermon.
Clankermon is not the other Clanker?
No, so it's based off Clanker, but it's like a Pokemon type game.
Okay, got you. Okay, so now this is the biggest and the best analogy I can give for what Syndicate is kind of like Cosmos. Like they have their Cosmos is also an app specific chain, but this is more like an L3. So this Syndicate is built on top of Base, which is an L2, and this Syndicate, the common chain, actually inherits Base for its settlement layer. and Base settles to Ethereum. So Syndicate settles to Base while Base settles to Ethereum. So it's kind of like an L3. So like what problem is Syndicate solving? Because that's the most important thing. Like, are they solving a problem? Biggest one is centralization of transaction sequencing. So you have all these blockchains and rollups. They use centralized sequencers or orderers, which can lead to censorship risk, poor ordering, and non-transparent MEV, which is minor extractable value. So just to break down real quickly and simply what MEV is, when you have transactions like, and you're trying to get inside of the next block, the block gets added to the chain and your transaction gets verified, you have something called minor extractable value. And you have validators and miners who verify these transactions. When a transaction when it's pending, it goes into a pool, and the miner actually basically gets to choose what transaction they want to verify. Now, everyone's in this to make money. So obviously they're going to choose the transactions that make the most money. So that means smaller ones don't get as much of a priority, right? And that's why you have the whole tipping thing. And then you have a lot of these miners, like they kind of are in cahoots with each other. So they can, it's almost like a monopoly where they won't take transactions that's under a certain level. And that's why Ethereum EIP 1559 went into play, which created a base fee to where ETH gets burned on every transaction, and so that people pay the lowest fee possible. So that kind of solved it. Okay. So another one, misalignment from value capture. So on many chains, value from transactions, MEV, and fees often accrue to the L1 or the centralized sequencer rather than the communities or the apps themselves. So like, for example, let's say I'm building, something on Base, right? Or something on Arbitrum. And, my app's just bitching. It's making all these fees. It's doing great. Most of those fees are going to go to the validators and the sequencers into the Base chain, into the ETH chain. What Syndicate is allowing you to do is so that you can actually capture some of that revenue, sustain your business, attract stakers, capture fees, and actually distribute value back to the people who are using your DApp, which I really, really like. So not every application, not every chain has the same needs. Some want low latency, some want particular ordering guarantees or particular fee economics. So Syndicate basically lets apps select or define these kinds of parameters, how they handle ordering, what fees they charge, how governance is structured, which is really, really important. So this means that apps aren't forced into a one-size-fit-all kind of roll-up model. Okay, now the risk. The success of this project is going to depend heavily on app chains actually being launched, right? Launched, used, staking behavior, developer adoption, where the developers build. If the developers aren't building on it, there isn't nothing to use. And if there isn't nothing to use, there isn't going to be any fees generated, right? So if a few app chains get traction and token demand may be weak, but if people start building on this thing, that's going to be really good. So now, just because the project is good, if the tokenomics are not good, it doesn't matter. So we can see here, we have a disparity of it's around 55% of the tokens that still have to come onto the market. All right. And the good thing is that a lot of people aren't going to want to sell at these prices. I do believe Syndicate raised VC capital. Basejunkie, correct me if I'm wrong. Actually, they did. So this is basically all of the people or groups that got token airdrops, pre-launch partnerships, liquidity operations, incentives, network commissions, staking, network treasury, basically to pay for things as the business continues to develop, when and if it continues to develop, research and development. Investors got 15% and the team got basically 25%. So basically almost half is split between the team and the investors. And if you go down here, what I do like is that the team and the investors with the largest stake, they have 4-year vesting with a 1-year cliff. Now, the difference between vesting and cliff, just to make this super, super simple because it's important. If you have a 1-year cliff, that's the time to where you can't sell anything. So 1-year cliff is like, okay, for this year, the tokens just have to sit there. I don't have access to them. It doesn't matter how high or low the price goes. Vesting, if it's vesting for 4 years, like let's say you have 100 tokens vesting over 4 years, that means every year, 25% or 25 tokens is now under your command. You can sell them. You can do whatever you want with them. Okay. So this is the token release schedule. So after the first year, right, it said 1-year cliff. After this is 12 months. So after 1 year, the cliff starts. So now the vesting starts for the investors and the team. And as you can see, the investors is the green here and the team is the purple. So right now it's just linear vesting amongst everyone else. Yeah, that's not too bad. So for a year, we're kind of in the clear. You know, I am bullish on Q4 and Q1. So I definitely think Syndicate will pump, but I do want to see projects start to build on it. And once I see that, then I'll be more comfortable buying large positions. But right now, I'm probably going to start buying like small positions just because the price is so down. So that's what I'm looking at.
A lot of valid points there. Like, first of all, the fact that the team don't have their tokens yet. Like, this isn't going to be a short-term play. They're VC backed. This is Aerosmith, not Aerosmith, Aerodrome's first launch on the. That was actually a pretty nice note. But this is their first launch on their launch pad. So the fact that Aerodrome is trying to create this new launch pad as well, and that this is their flagship, I feel like from a reputational point of view, they're very incentivized to make this work. This had all the base team, calling it and supporting it. This really should be higher. This should have, I think this has a future. So I don't have any intention to sell because this is so low. Like right now, like, yeah, just down, #down bad. But a good time to DCA or nibble a position if you were smart on the sidelines and didn't just ride this slide all the way down. But I think the other point you made about developers building on this, that's really going to be the fundamental utility case of it. If they've built this chain, this L3, and nobody wants to build on it, then what's the use case for it?
It's like an abandoned building.
It's like a what, sorry?
It's like an abandoned building.
Exactly. So just to make it crystal clear, what were the benefits of building on Syndicate versus simply building on Base?
You get to have customization over the fees you want to charge as a chain, right? On Base, it's kind of like let's stay with the abandoned building example. Base is a building that's established, that has their own rules, their rent, and things like that. So if you set up your office inside of there versus an office that maybe they own, but they give you customization over, you're subject to their rules, right? You have to kind of do what they say. You have to adhere to their chain's terms. But if you build on Syndicate, you get to choose your fees. You get control over transaction ordering, sequencing, MEV procedures, right? So you get to determine like what transactions get ordered. Because if you have an app where it's just a bunch of small transactions and you're on Base where there's larger transactions, if I'm a validator or whatever the case is, I'm going to go for whatever's more profitable. But if your whole business model is about volume, like the Walmart model, sell a lot of things at low price versus a few things at high price, your transactions aren't going to go through. And if your transactions aren't going to go through and people are using your app and they're not going through, it's going to make your app less desirable, right? So you're going to want to have things set in order to where your chain that you're building or your product that you're building, the chain that it's on, in this case, Syndicate, you can optimize it for the things that you need to make your business run how you want it to run. So going back to the real estate model, now you get to set up your own building. You get to charge what you want from rent. You get to say how the stairs go up and down. Do you want elevators? You get to say basically how things are ran inside of your building versus being forced, buying a house on rented land.
Okay, well, that's an interesting analogy, and I think there are people that will like the more freedom of customization. I've never played Clankamon, but the fact that they're the number one on Farcaster, number one game, I think it is, and they've opted to do that with the extra flexibility, which that they said was fundamental to their game, enhancing it. they may just be the pioneer and opening and the use case, the case study for other projects to see, like, okay, you know, wow, you can do that over there, but you can't necessarily do that on Base, like the L2. Yeah, I'm hoping that more projects build over there, because it's wonderful to have a tapestry of different projects and see creativity really flourish unhinged. And then, from a personal point of view, from a bag holding point of view, like, yeah, build on it. Let's renovate that house. Let's make it a beautiful mansion, and then I can upgrade my laptop.
Yeah, yeah, and another thing that's important. No, that's true. Another thing that's important is that we talked about a few episodes ago how Aerodrome is basically integrated on the back end of Coinbase DeFi mullet, right? CFI in the front, DeFi in the back. So now any token on Aerodrome you can buy on Coinbase, and it seems like you're buying it on Coinbase, but you're actually buying on a DEX without having to set up a DeFi wallet. So given that Aerodrome is integrated with Coinbase, and now what happens with Aerodrome, it affects Coinbase's reputation. I wouldn't be surprised if pretty soon there are grants and different incentives going out to people who want to build on Syndicate. And I'm sure that while Syndicate allows you to have your own rules, I'm pretty sure, since they're settling to Base, actually I am sure they're settling to Base, Base is benefiting not just from a reputation standpoint, but from a monetary standpoint on how well they do. So I'm sure that once they get their ducks in a row and things are able to go live, like I'm not sure where they are right now, I'm gonna make a fundamental analysis video on this, like on my channel. This one I just wanted to, go through the most important things without getting too in the weeds. I think we're gonna start seeing some stuff soon, kind of like what we're seeing with Zora. Like they're paying creators, like they have like a fund set up to where they're paying it out to the top creators. Follow us on Zora, Basejunkie, Noah Owls, and Crypto Noah. Like for example, Coinbase just made an acquisition to some streaming business, and they're going to add that to Zora.
Up only. I don't think it's actually confirmed, unless it's like in the last few hours.
I saw it confirmed. This was a couple of days ago. They bought a streaming.
Up only.
I forget what the name was.
It's not the thing from Kobe, because that was huge news. He bought the NFT to do 8 episodes of season 2 of Up Only, and that was a recent catalyst for Zora, and especially like streamer tokens. I mean, I was riding that wave. My token went up to like 270k market cap on after that news, as all streamers were getting a bit of a boost, because there was a lot of speculation that Kobe will be streaming on Zora. Like, where else really, other than I guess his own platform? Who knows the specifics? But if you have information that I don't have, pray tell.
Maybe I'm tripping out, but it was some streaming platform that I heard that they were buying. Maybe it's not finalized, but I'll look back into that. I don't want to say the wrong thing.
I know they bought those podcasts, so there's going to be a huge. I mean, dude, I was thinking about Bill the Bull late night on Base about this, because he keeps saying to me, like, know your worth. Like, don't sell yourself short, or you put yourself down, or like, just know your worth and be okay to say no to sponsorship deals and stuff. And this whole Kobe situation. So him and his friend Ledger did a season 1 of Up Only, just YouTube videos which had a massive following. And he said they made this NFT, and they made it years ago. If whoever buys and burns this NFT can have the, like, you can ask us to do a season 2, basically. And he put the price at 25 million, and obviously it's like, I'm sure at the time we probably put it at like a joke price. It's like, I'm not doing this again unless somebody pays me 25 million. But then the fact that and he was able to hold out, not like that's my number, holding out for it. If someone wants to pay me that, fantastic, I'll do it. But I don't need it. I can say no. And he knew his worth. And then finally, in October 2025, Brian Armstrong was like, "Get to work." Boom, 25 mil
That's crazy.
for
Yeah,
8
man,
episodes.
I'll take it. Y'all want to pay us 25 mil? We'll do 8 episodes for y'all.
I mean, there's a ladder. It's that's the most I've ever heard for. I mean, that's like more than Hollywood stars on like
Yeah.
TV shows. That's mega, but it shows that there's room to grow. There's always room to grow.
Yeah, it's for the culture. Well, before we wrap up, speaking of Zora, let's take a look at some pools and some yields. And
Yes, please. You know what I was actually thinking? So I'm going to get back into the OpenX AI pool.
okay.
I think there's something going to be something around the corner. But I am making money on Zora, and every day I wake up to some more Zora
Same.
because people are bullish on your boy. So right now I've been buying creators, but I was thinking today like maybe I have 105 different creator coins. Yeah, I'm supporting. I'm showing the love. But I'm thinking to maybe use some of this Zora and set up a Zora liquidity pool.
I think that'd be a good idea.
I need people to start trading my token overnight because I've been buying other people's tokens. I have $6.91 in Zora. I'm bullish on everyone.
Yeah. Dude, look at this. So this is my Zora ETH pool. Fee 887% APR. And if we bust this thing on down, it's only been 11 days and I made $400 in total. And that's, hey guys, that's not how much I made in 11 days. In 11 days, because I've collected fees. You can see I collected around $900. In 11 days, almost $1,300, guys, right here, total.
$4,600 in. You made $1,200.
And no, it was actually like 38.39 because Zora pumped. So I'm up almost 1,000 on principal, and then I'm up 1,300 on fees. So I'm almost 100% ROI factoring in capital gains and fees on this pool.
Dude.
And then this Zora USDC, I like this one because it gives me more dry powder. And as soon as I get word of when the base amp is launching, I'm launching a tranching strategy on Zora because Zora is going to run. I just know it. I mean, we don't know it, but I'm highly convicted. So I've been in this one for 11.7 days as well. And right now I have 433. And again, I was at 3,800 on this one. The capital gains isn't as much on this one because it's a volatile stable pool. It's paired with USDC. And obviously USDC hasn't been going up. But $1,158 in fees and around 400 in principal. That's like $1,500 in less than 2 weeks, guys. And I like this pool because, like, look at this. This is what I call concentrated liquidity mountain. The reason why this thing is paying so high is because with concentrated liquidity providers, they're being greedy. They have, most of the liquidity is concentrated inside of this tick. So if price goes up a little bit and it goes into this tick or any of these ticks, I'm gonna be making way more. And that's why I was making like 1,400 to 6,000% APR for weeks, because people get bullish, they get really, really tight ranges. And if it just moves out there for a second or a few hours while people are sleeping, is way less competition. And the volume to TVL ratio is different inside of each tick. So if it goes inside of any of these ticks, I'm gonna be making a killing. And it does go in and out of them. If we look at Zora USDC, you can see that it's been going up and down. And if we go here, it's between 9 cents and some pennies after that, or some decimal points after that. And if we go here, we were down in the 8%, the 8-cent tick range, still 9. And when it went up to here, which it just was yesterday, you make a lot more money. So yeah, I like to keep that wide net because it's just like, you can think of it as like, okay, you have your net, and sometimes it'll catch most of the fish, but you'll miss some fins. I want to catch the fins and the fish. And this is how I do it. Because once it goes into these ticks, you make way more money. So yeah, doing well. And if we let's look at just some overall base yields before we close out, since this is a base show, and we're gonna look at base. Look at these yields, guys. I'm not sure what all this Chinese BS is, but Look at that Toshi ETH. Remember I was saying this thing's been on top for a while, bro. Look at this, 4,000% on PancakeSwap. Volume, 19 million. Liquidity, 85,000. That's insane. God.
Yes.
Avant, 1,600%. Avant ETH.
Well, one thing about that specific Toshi Weth pool though, it's only if you look at like, the fees
Look at this.
generated
Zora ETH, Zora UCC. Sorry, what were you saying, bro?
to the Toshi pool with what 18 million in transactions, it's got a 0.05 fee. So that one's actually only made $9,500 in fees.
Yeah, but that's a lot when it's only 85,000 in liquidity. It's all relative.
That's valid.
It's just like if it was 185 million in liquidity, but the fees was 9 million. That's a lot. So yeah, this is a lot of volume, man. 19 million in volume for just 18 in liquidity. Those Pac-Men are eating fat. They're eating good.
When you see things like that, so Toshi, I mean, they're the biggest meme coin on Base. And when you see returns like that, does that ever tempt you to just go over to PancakeSwap and put $1,000 in?
Dude, I was just making 6,000% last week on Zora.
That's fair. Yeah. What is this? 4,000 chump change.
Yeah, so it's like it's not gonna last. And I don't like if I look at the Toshi chart, these are all the things that come into my mind when I am doing all this. So this is the daily. If we go weekly, I think Zora is gonna pump harder and sooner than Toshi will. So I'd rather be accumulating something that's gonna pump way harder than something that it is trending upwards. Like you see higher highs and higher lows. This is a good looking chart. It's trending upwards on the bottom, but at the top, it's consolidating. So it's more so forming a wedge. And let's see, if we look at the monthly, yeah, still going up. Weekly. On the daily, it's just consolidating. So I'm not excited about this chart versus looking at Zora, way more bullish. If we look at the weekly, we just had a huge correction. Now we're making our way up, right? If we look at the 4 hour, even on the
question though about Zora, aren't we a few days away until the unlock?
I saw something on Twitter that something about that was changing, but even with the unlock, let me I mean it's linear right now, so it's already unlocking.
Wasn't there like an investor unlock or a team unlock like happening at the end of this month?
I think so, yeah.
So did I just say in 7 days?
It already started. See,
when did that start? Just now?
Yeah, and we still got a 60% pump. So it's like just looking at this again. Market cap 409. So you have around 60% of tokens that have to come onto the market slowly. And with everything with the Base app, like let's say even if people sell $100 million worth, I think the buy-in volume is going to be way more than 100 million. I'm thinking this can go to the billions in market cap. So even with the potential selling pressure that is threatening the price, I think the potential buy-in pressure is much larger. So I'm okay with it. This was something like, okay, growth metrics are declining. More people are coming onto Zora. They have their fun. They're talking about making acquisitions. You know, they're funding creators, so they're creating incentives for more people to come on board. And the creator coins have to be paired with Zora. You have to buy Zora to buy coins. So I think the potential demand outweighs the potential selling pressure. So I'm okay with it.
Yeah, that makes sense. I mean, it's impossible to be bearish on Zora, to be honest.
Yeah, I mean, it's possible. Like it can get hacked and they can keep shutting down accounts, like how they did with the one guy. So it is possible, but that's just why I use risk management. I'm investing I think Zora's not even 10% of my portfolio. So I'm cool with it, man. I think it's going to do well, even with the unlocks that are happening. And you have to keep in mind, all those unlocks aren't going to sell. Some of them, they're just as bullish as we are. So they're going to be waiting out some of them for price appreciation as well.
Yeah, that makes sense. Well, dude, let's put a ribbon on this.
Let's do it.
You know, I think we've covered a lot today. We looked at OpenAI, Syndicate, not the deepest dive, but a nice overview. Didn't get too much in the weeds, but is your Syndicate video out on YouTube?
Not yet. I'm
Oh yeah.
I'm recording it before our next show.
Okay. That's that'll be one to look forward to.
Yeah.
And then bullish on Zora. All right. Well, Crypto Noah, are there any final words from you?
No, guys, join our free community is what I just keep saying. We just started releasing our weekly profits every Friday. Those get sent out into the free community. Every moment that you're not providing liquidity in DeFi is a moment where you're just not getting paid while you sleep. Warren Buffett says, if you don't figure out a way to make money while you sleep, you'll work till you die. Eventually, institutions are going to be able to come in and provide liquidity, and by then the yields will be saturated. So this is the best way to generate passive returns for the common man with no barriers in the history of the world. So we love to help you guys with that. So if you want to join the community, comment on this stream, just say send link, mention me, and I'll get that sent out to you. Basejunkies in there as well. And other than that, let us know what you guys want to cover, what you want us to cover for the next show. Retweet Base, retweet Optimism, let them know we're doing the Lord's work. And that's it. We'll see y'all on the next one.
Perfect. All right, guys. We'll see you next Wednesday for episode 10. Wow. How time has flown from just nascent number 1 to the big 1-0. All right. I want to say a special thank you to you, Noah, for all the DeFi insights. I definitely feel like I'm learning and asking questions that are interesting to me, but also hopefully opening up the opportunities for others to learn as well. So shout out to you. I really do enjoy doing these shows, and I look forward to the next one. And we do these every Wednesday night, 8 p.m. UTC. Until then, stay safe, stay healthy, but most importantly, stay based.
Peace out.